Hello and welcome to another update video about Bitcoin Cash. Yeah, Bitcoin Cash reacted to our support area here on Wednesday, and now it's a little bit of a wait and see if it actually works out. Yeah, so this trend reversal area was triggered at the 23.6 Fibonacci retracement level at $249. That was the first level I expected price to head down to in this wave 4. Ideal level is typically the 38.2 Fibonacci retracement at $210. That is still a possibility. So we're going to take a look at that, what is more likely, and have we already reversed or not. Yeah, the overall idea is that we still see this as a part of a corrective ABC structure to the upside, so that the C wave could top with the next swing high. So if we make another high above 327 US dollars, no, 330, yeah, we need to break above the third wave high. If we do that, then we can count this as a fifth wave. And if the fifth wave is topped, then we need to be watching for a steep decline, possibly. But I will also give you an alternative bullish support area. However, I don't think there is a great likelihood that this will hold, but we'll see. You know, I will certainly provide that for any Degans out there who like to trade it further on the long side. But that is certainly going to be the level that, if broken, will most certainly tell us that we have topped in the C wave. Yeah, I mean, what we need to be watching for is a possible 5-wave move to the upside to get something long-term more bullish. I mean, short-term, the trend is clearly up. Short-term, the trend is clearly up. It's just that, does it have any long-term, sustainability, I want to say, right? So at the moment, I see it as an ABC correction, part of a wave 4. We talked about that. And even in this sort of overall bearish pattern, one more high is currently likely, especially as long as we're holding the orange support area down to 182. Doesn't need to go down that low. As I said, 249 is the first support for this fourth wave. 210 is the next one. 182 is the last one. Below that level, we might look at a very steep decline, and this upside pattern has likely failed. But one more high is at the moment preferred. After that one high, we need to be watching. Yeah, I think the risk is obviously increasing. Price has increased massively in a very short period of time. Experience tells us that these rallies are typically not sustainable, but who knows? Yeah, we will see. That's why we're watching support areas, and as long as we're above support, price can keep climbing. Now, again, we have enough waves in place to consider this ABC correction complete, and when it reached the $249 area or level, it actually also reached the minimum expectations in terms of the actual retracement strength for a wave 4. So at the moment we're watching, is this wave 4 in? It is unfortunately not entirely clear, because as I said in the last video, what needs to happen is we need to break above $310 next. That is the B wave high. That will give us some more certainty that the wave 4 has bottomed, but we will really only, let's say, know if price breaks above the third wave, and that is $330. Then we can say we are most certainly in the fifth wave. Until then, we could just be getting an extension to this correction. Even though I have an ABC pattern complete, you can always get a double zigzag, which would be a so-called WXY structure, which would look like this. So basically, the first ABC would become the first wave of this larger corrective wave, WXY. That's certainly not unlikely, given that the wave 4 so far only reached the 23.6 retracement, which would be a very shallow correction. Now, you can also add possibly a trend line here. We use the 4-hour candles for that, and that will give you an additional idea, I believe. Yeah, if you have a breakout above this descending trend line, that could be an additional indication that we are in the fifth wave. However, look at volume. My view is that this rally would need to take off, and if it's very choppy after the break and the volume isn't increasing, then it's likely not a sustained break. Yeah, so the levels should be clear, and target wise, in the previous video we defined sort of $395 for this fifth wave. There is structural resistance and Fibonacci resistance. So This should give you everything. Obviously, you could say you focus on higher against the Wednesday low, but I remain skeptical until we have a break above the trend line, breaking above the B wave high, and then obviously the third wave break. So the break above the third wave top at $330 would be the last evidence you need, or we need, that we are in the fifth wave. Now, doesn't mean you have to wait for all levels of confirmation to make a trade. That ultimately depends on, are you a breakout trader? Are you a pullback trader? As a pullback trader, you would have entered here at 249. That's what I like to do typically. I like to trade the pullbacks in an uptrend. It's a little bit of catching the falling knife, but with calculated risk, you know where you want to get out and you manage your position size. If you're a breakout trader, you get tons of fake breakouts. Okay, so that's just a balance you need to deal with. And as a pullback trader, you get a better entry price. But your position largely gets entirely filled, and you are dealing with more uncertainty because the uptrend isn't yet confirmed. So yeah, that's on the flip side. If you're a breakout trader and you wait to trade the horizontal breakout here out of this third wave, there isn't really much more reward in there. Okay, so that's what you need to decide for yourself. But we certainly had a trade setup for a pullback trader, and this might be a breakout setup. But bear in mind, I think there isn't much more in there. There is not too much more in there. We start to see bearish divergences. We saw them on the 4-hour chart already here. Yeah, with the lower highs on the 4-hour. If we go to the 8-hour chart, which is a little bit more relevant, we also saw here bearish divergences. It's now flipping bearish. So, the divergences are building. The 12-hour chart showed us bearish divergences. Let's go to the daily, which is really relevant. Daily. And also here we had a bearish divergence. Yeah, I mean, it's still embedded in the overbought range, but typically a sign that this is over is when it breaks out of the range to the downside. It's only an indicator, so indicators really don't tell you anything that you don't see on the price chart. They're just indicating. They're derivatives of the price. So but we can use them to look for divergences. That is sometimes quite useful. Yeah, that's my update about Bitcoin Cash. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.